conditions. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled The Complexities of Inherited IRAs. Mike, a lot of this complexity started at the end of 2019. What are we seeing now in terms of how inherited IRAs are treated today versus how they were treated before?
The biggest change is for people other than a spouse, and I'm going to overly generalize here, but as a rule of thumb, if you are inheriting a retirement account from someone other than your spouse, most likely you are going to need to empty that account within a 10-year time period and probably take a required minimum amount every single year, although the IRS has been willing to waive that since the rules were changed.
Now, as you mentioned, they've waived that each of the last 4 years, but there's no guarantee that they will in the future. Is it worthwhile for investors to talk with their tax professional and advisor to figure out what the best plan is to minimize taxation over that 10-year period anyways?
I mean, even if they don't waive the penalty, even if you do have to take a minimum amount, you should be planning this, right? Because if you just wait, then you might end up being surprised at the end of year 10 when all of a sudden I've got this massive account to withdraw and I have a whole bunch of taxation to realize, and it starts impacting everything from my Medicare premiums to my capital gains rates to everything under the sun.
The guide this month is titled The Complexities of Inherited IRAs, and there are 2 ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001. Or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. the Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck and Marc here with you, and some big news from Tuesday with markets closed yesterday. Nvidia taking the mantle of the most valuable listed company in the world. And does this mean anything, Marc? That's my question to you.
It almost certainly does. Is it significant for the long term? I don't know. It's intertwined with the AI story.
When we talk about that and what that story is, I think we have to kind of unpack that a little bit, because one of the things that bothers me about markets is when people consistently say, well, the price doesn't match the fundamentals, and it kind of misunderstands a couple things. The first is fundamentals are a story just like anything else. It's a story told of specific numbers, but it's, hey, this is the story that I have that supports the stock. It's that, quote, the fundamentals are good. Other stories can support stocks as well or tear them down. Ultimately, why we make buying and selling decisions is not just because, there's a number 3 or 4 there. It's because of the story that we tell ourselves. It's fear and greed, personified into, some kind of story. The story about AI, if you are buying it as a long-term investment, not just something that's hype today, is, hey, this is going to fundamentally reshape how we live, and companies will be willing to spend billions of dollars building this because it will still be cheaper than paying for employees to do similar work in the future. Is that a fair take on it?
I think that's one aspect of any framework you apply to evaluate whether or not this Nvidia's Ascent is crazy or grounded in something. Well, it's almost certainly grounded in something real. Their sales growth has been spectacular.
Their profit growth is, it's not just unprofitable tech either. They're highly profitable selling this stuff.
Will at some point their customers, the cloud computing companies that are in turn selling this capacity to companies who they hope will adopt AI-based software, will they find that there's a market for whatever it is there? So they have to turn this into something, right?
Yeah.
That companies, that us and you listening, want to actually buy. So the rubber's got to meet the road. NVIDIA sales, absolutely for real. Their growth, spectacular. But what if this all just seizes up because their customers can't in turn sell this nebulous thing we're calling the promise of AI to in turn their customers. That's how I don't know if I explained that well, but that's how I see it. I've not yet seen, unlike with the internet, Chuck, where the results were tangible and almost immediate, we lived it. It did change the way we worked and played and shopped. And it was a blip in the productivity and growth statistics. Can AI really do that much more than the internet? Or for that matter, than like the light bulb? Which was also, I don't mean to diminish it, but it was kind of a blip in the broad sweep of the trend of GDP growth.
The light bulb.
Yeah. It's not like you can pick it out. Or even all the big innovations, they just kind of blend into the trend. Now they become part of the trend. I'm oversimplifying.
Totally.
But is this going to be more revolutionary and impactful than all the big revolutions in technological revolutions in, say, recent history? Juries, I'm not saying it won't be. I'm just saying
it's hard to
tell. You've got to be, when you're managing other people's money like we do here, you have to be skeptical.
And the other piece just on this, when we talk about, think about why a company says, hey, I'm going to do this. Let's say that they are paying an employee all in, including health insurance and this and that. They're paying him $80,000 to do whatever job it is. I'll use the job of technical writer just because it seems like something that AI probably could do right now.
It's a great example.
Take, a complicated technological system and write how it works so that average users can use it. That would seem to be something that generative AI should be able to handle.
We're there now.
So the question is, let's say that I am company X and I'm trying to replace that technical writer. There are a few different costs then that I have to figure out. First, am I going to build the AI system myself? If I am, then I need to figure out how much it's going to cost to buy all of the processors. I need to figure out how much it's going to cost me to build the data center that operates the processors, that holds them. I got to figure out, hey, what's my electrical cost going to be to do all this? Because these things are just huge power sucks, and if everyone starts doing this, what happens if electricity costs start going up? I'll give you an example. Texas, which is attracting data centers left and right, just upped its projections for end-of-decade power usage in the last year by about 25% because they said these data centers are just chewing up massive amounts of power and they need to figure out how to produce enough in order to fulfill it. So that's something. So you figure out all these different things and then you say, okay, if we amortize this across all the projects that we have in 10, 15 years, will it be cheaper on average than hiring employees? Maybe. I don't know. I'm not running these numbers myself because I'm not trying to replace a bunch of employees with this stuff right now.
Go ahead, sir.
So when we talk about the large-scale use of AI, those are the numbers that are going to be crunched by accounting departments at major corporations. I can tell you from my personal use of AI, which is probably like 3 to 4 times a week, it's for assisting me with writing stuff, but I'm happy to pay Microsoft $20 a month or whatever it is in order to do that. But it's not something where I would look at it and be, hey, am I willing to pay Microsoft $40,000 a year to replace an employee that I'd have to pay $60 or $70? No, I'm not. Like that doesn't make sense given how I use it. And so I think you have to really figure out, hey, what is the overall demand going to be for this? And is it going to be able to do more than just write technical manuals and things like that? Because that's what the promise of this has to get to. It can't just be generate me, a list of 10 things that are important about X, Y, or Z. It's got to be more than that. Otherwise, we're just talking about something where, hey, yeah, it's nice to pay $20 a month for, but I'm not going to, justify replacing a $60,000 a year employee with a $40,000 a year one if that's all it does.
McDonald's can't even get it to the point where it can replace an $18 an hour drive-through attendant.
And the other piece on this is, and this is something that's gone through my head quite a bit on, trying to make sense of this. Hey, what if this is just a CapEx cycle for businesses? And we've seen that, Nvidia is being priced as if, hey, this is going to be something that businesses do every year because they have to invest in AI every year and they have to continue doing it. What if it's just a CapEx cycle that is going to end at some point, just as all CapEx cycles do? And that's all it is here.
Worse, what if it's not a cycle? What if Amazon and these other cloud computing providers get their data centers up to the point where they could support AI software on the part of all their customers, and then nobody comes? So, or people do what McDonald's did. McDonald's was presumably paying a data center for the space to do what the little experiment they rolled out.
Yeah.
They're no longer paying the data center for that space. They shut that AI, I'll call it an AI bot. It's a program or something. They shut that down. So what happens if, as companies try and fail, maybe some succeed, but I keep using McDonald's as a example because it's very accessible. And it's an obvious use case.
They were just trying to take orders.
They just wanted to take orders from human beings who speak English. It couldn't even do that.
Yeah.
So there'll be successes and failures, but the industry's expanding. Data centers are, as I understand it, under the presumption that everybody's going to be using this every day for every conceivable task. Are we going to have a big overcapacity? Said more succinctly, is there going to be a big overcapacity of these chips at some point? Nvidia sitting around
there always
twiddling
is.
its thumb? That's a good point. It is the nature of the...
There always is in the semiconductor business.
Yeah.
And this is the other piece that I come back to on. I keep saying the other piece because there's a lot of pieces, man, that are questionable, not about Nvidia as a company, but about the long-term thesis that it can keep growing at 3% a day forever, because that's basically what it's doing right now. Is like the stock price is kind of consistently going up like 3% a day for the last few months. Like that's not gonna, can't go on forever. In the 2000s, this piece from the Wall Street Journal mentions this. Cisco at one point became the most valuable company in the world. And Cisco, if you know anything about them, like they sell really boring technology now. They sell routers and telecom equipment and stuff like that. It was very hyped back then, and the idea that was sold that makes you sound really smart as an investor is the idea of, hey, if there's a gold rush going on, don't buy stock in the gold companies. Buy the people who sell the miners the picks and shovels. Like that makes you sound smart when you say like you buy the picks and shovels company. Well, the problem with picks and shovels companies in the tech space is that the margins go to low single digits when it's all said and done because everyone gets into making this stuff. It's why, in the 1990s, everyone in their freaking grandma was starting a PC startup. It was Gateway, it was Dell, it was I can't even remember all the different ones that were out there. There were like 15 or 20 PC manufacturers. There's 3 now because selling the hardware in a commoditized space doesn't usually work out very well. And look, there's probably people way smarter than me that can tell me, hey, here's why Nvidia is not going to be able to be caught by this company and that one. But in the tech space, you always end up getting caught, especially on the hardware side. Someone always catches you. It's not like Nvidia's always been this giant. It's in the last year and a half. It's not to diminish what they've done, but it's more to say, hey, understand how this could go wrong because this has all happened before. It's kind of what I'm getting at.
Yeah, we just don't know enough about the potential for... Even if AI's potential is mostly realized, it's hard to believe, this is the point you were just making, that Nvidia will be the only company to
they're the only one
the
that's
only hardware company to capitalize.
It's like, we're going to become the United States of Nvidia? What are we going to do here?
Aren't Apple and Microsoft and others working on knockoff products?
Of
I'm
course.
oversimplifying.
No, of course they are. You know why? Because Nvidia's margins are 50%, and Microsoft doesn't like seeing 50% of its dollars just going to profit. They say, no, let's see if we can build this in-house. And by the way, they don't even have to build it in-house because Nvidia doesn't build it in-house. This is one of the most commonly misunderstood things about Nvidia. They don't make their own chips. Taiwan Semiconductor does. Nvidia has no manufacturing facilities. None. So here's the other piece. What happens if Taiwan Semi says, hey, you know what? We're getting lots of orders. We're jacking the cost up on you by 50%. We want some of that margin. Where are you going to go? Who else is going to build these for you? We're the only game in town. Let's take a quick break here. When we come back, we'll talk about the Bank of England and why they decided not to cut interest rates today.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting DAV5K.Boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit DAV5K.Boston. The DAV5K Boston is presented by Veterans Development Corporation.
Bank of England deciding not to cut interest rates at its June meeting here, bucking the trend of what we've seen from other European central banks. And I think one paragraph from this Wall Street Journal piece really sums it up. Quote, much of the decline in UK inflation in recent months has been due to falling energy and food prices. The BOE worries that since those falls are unlikely to continue, rapidly rising prices for services will push the rate of inflation back above its target in the second half of this year, and that revival may be long-lasting if wages continue to increase rapidly. Your thoughts? Mark?
They're struggling with the same factors, trying to pierce the veil of the noise and the fog that these special factors create. Food, energy, shocks from other sectors. Sometimes researchers just call these things supply shocks. They group them all together, but the most common example would be oil price shock, or food probably. It's hard to differentiate whether it's that's driving inflation or disinflation versus too much demand in the economy. And I'll throw elevated inflation expectations into the mix, too. And researchers have found it productive to think about the process of inflation as some combination of those factors like we talk about a lot. And the Bank of England and the ECB, the European Central Bank, the equivalent of our Federal Reserve, they're all struggling with the question of has the disinflation, they've experienced a miraculous disinflation as we have over the last 18, 24 months. Is that just due to special factors, lucky shocks, energy prices coming down, other prices moderating, services is a little bit elevated, shelter's a little bit elevated here in the U.S., but other things have moderated? Are those kind of one-offs, or is the economy actually running at a sustainable pace? I like to liken it, I don't know if this is productive, to somebody trying to figure out what's the right number of calories for me per day. I'm older now, so I or I'm middle-aged anyway, so I calorie count. I think about 2,000 is right for me, given my activity level, but sometimes I can't tell if I'm keeping weight off because it's summer and I'm doing more in the yard, or if I've actually hit the right caloric bogey, so to speak. So I'm looking for the natural rate of calorie intake for myself. The Fed's looking for the natural rate of interest for the economy, and the only way to know that is kind of after the fact. Is the economy putting on weight, i.e. is inflation too high?
Am I going up a belt size or am I going down one, you know?
Is there, when I click the seatbelt in the car, is there something bulging over into my lap, or am I feeling fit and trim? The only way to really know is after the fact, whether or not you've calibrated that correctly, and that's what the Fed, the BOE, the Bank of England, and European Central Bank, and central banks around the world really are struggling with right now, finding that magical natural rate, which you never actually hit, but you strive to attain.
And on the political side in England, remember, they also have a rather humorous July 4th election that's coming up. I don't know how... I quite honestly, I don't know how you can call an election for July 4th in England. Isn't that just kind of compounding the problem?
Are they still sore? I don't think so.
They're not, but it's also an election that the Prime Minister's party, Rishi Sunak, they're expected to lose in fairly convincing fashion. So isn't it just kind of like it's? I mean, again, the jokes that I've seen on Twitter are basically like, "Hey, like at least this will only be the second worst defeat the British suffer on July 4th." Like it's. Neither of you really think this is funny, huh?
To the British,
not really.
You don't think it's funny that the Prime Minister who's about to get smoked in the election calls a snap election for the day that the United States declared independence from Britain?
No.
Oh. Well, I do.
I just think it was convenient.
Yeah, maybe.
I mean, he doesn't have to do it that day. You would pick any of the other 364 days on the calendar.
Yeah, he wanted that one.
It was convenient.
I mean, I don't know. Like, it just seems like kind of a bad day to do it, but that's just me. I'm trying to think of, like, the comparison in the U.S. and what it would be here. Like, there's nothing that's really similar because anything else that the U.S. has really struggled with has been too recent, and so you have people who would be, like, materially impacted by it, so you wouldn't do anything. Like, anyone who died fighting in the revolution's dead now. Obviously, anyone who lived during the revolution is dead, is what I'm trying to say.
Is still dead.
There are no survivors of the American Revolution today, so you can't offend anyone by it.
Oh, Joe Biden.
Close, but no cigar. Like, it's... I guess what I'm getting at is you would just think that maybe you'd call it for, like, I don't know, the 6th, the 7th, any day but the 4th.
Maybe those days have significance for the Brits that we're not aware of.
Could be.
There must be a reason, Chuck. It must be... presumably they look at people's calendars on English Outlook.
They didn't look at George Washington's. Let's take a quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about the differences between revocable and irrevocable trusts. Todd, when would it make sense to use an irrevocable trust versus a revocable trust?
Yeah, so in this case, you really need to think about a couple of things. One, how much you're worth. Obviously, if you're worth, well over 4 or 5 million, 6 million, probably you're self-insured, so you're not so concerned about nursing home planning, and therefore the irrevocable Medicaid trust that we're talking about here might not be as applicable. But 4 million and under, folks are saying, and the other issue would be over age 60, let's say, and there's no rule of thumb, but 60, 65 is a great time to be thinking about protecting assets from the nursing home because it takes 5 years to do it. So if that's the case, then an irrevocable trust would make sense. And don't be put off by the word irrevocable, because you will find that the differences between revocable and irrevocable, at least these Medicaid trusts, is very, very few and far between. You're still very much in control. You live in your house. You enjoy your income. You manage your money. You buy and sell your property. It doesn't matter that it's irrevocable, so don't be afraid of it.
The estate planning experts at Cushing & Dolan have written a brand new guide that will answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this guide by calling 866-848-5699. That's 866-848-5699. Or you can also request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets have resumed trading after the Juneteenth holiday yesterday and are in positive territory as Wall Street reacts to a flurry of economic data points this morning, including housing starts and building permits, in addition to jobless claims. Right now, the Dow is up by 106 points, about 0.25%. S&P 500 is up nearly 0.5% or 24 points, and the Nasdaq is edging 13 points higher. Russell 2000 also up by only 3 points. 10-year Treasury yield up by 6 basis points, now at 4.28%. And crude oil up over 0.75%, trading at $82.24 a barrel. Darden Restaurants reported mixed quarterly results ahead of the open this morning, beating on earnings, yet narrowly missing on revenue forecasts. The parent company to Olive Garden and many other popular restaurants also saw its same-store sales decline for a second straight quarter. Darden is also anticipating that its same-store sales will grow only 1% to 2% for fiscal 2025. However, shares are up by 1% today. Meanwhile, after surpassing Microsoft to become the most valuable company in the world, Nvidia stock is up another 2% today. So far in 2024, Nvidia stock has surged 174%. Elsewhere, Accenture stock is jumping by 6% despite the information technology company missing earnings and revenue expectations for its latest quarter. However, the firm did post more than $900 million in new generative AI bookings. In a post on X, Elon Musk said Dell Technologies and Supermicro will be building a supercomputer for XAI, the AI company Musk launched back in 2023. Dell up by over 1.5%. While SMC shares are up by 7%, and KB Home beat on top and bottom lines for its quarterly results, sending that stock up by 4%. I'm Tucker Silva, and that's Wall Street Watch.
Boeing's CEO David Calhoun was in front of Congress facing more than 2 hours of questioning from a Senate subcommittee that is looking into problems at Boeing. And this is actually the first time that Calhoun has been questioned in public since the Alaska Airlines door plug blew out in January. And I just want to read a couple quotes. There were a bunch of relatives of the people who were killed in the 2018 and 19 crashes that killed over 346 people. And Calhoun turned and faced him and said, "I apologize for the grief that we have caused." One of the people whose daughters died in one of those crashes said, "Look, where's the accountability when the CEOs of Boeing, management of Boeing are walking away free with millions? We want answers, transparency, and accountability, and wanted them to be in jail. We haven't really gotten those things." And also, Calhoun kind of needed to be defensive in a couple areas where, hey, Boeing provided a bunch of stuff to this Senate subcommittee before the hearing, and one senator was saying, "Look, this is basically gobbledygook," and Calhoun said, "Yeah, I describe it just as you did, and I can't justify it." This also comes on the back of another Boeing whistleblower coming forward on Monday, saying that the company mishandled faulty airplane parts and that some of those bad parts were later installed in airplanes, and saying that he was told by his supervisors to conceal evidence of the mishandled parts from federal regulators. So, look, something continues to stink here at Boeing, and this is bothersome to me because, Mark, we talk an awful lot that, look, whenever you're doing anything, just especially anything complicated, something at some point is going to go wrong. Like, that's the very nature of building large, complicated machinery. What Boeing has prided itself on historically is not that nothing ever went wrong, but that they built in, redundant systems and backups such that when the things did go wrong, you didn't really have any deaths. One of the greatest things that you can say about aviation in the United States is that basically in the last 25 years, there's been one accident that has resulted, two accidents that have resulted in fatalities in commercial airliners. There literally is no safer place that you can be on Earth than in a commercial airliner in the United States.
Well, on the ground. Looking at it.
Not true.
No.
You are literally safer in the air than you are on the ground. In the ground.
That is an absurd statement.
Let's talk about it. Talk about it.
You are... I understand.
I can get hit by a car on the ground. I can get hit by falling hail and this. all kinds of stuff can happen to me on the ground. What can happen to you in the air in a commercial aircraft?
What is your... Yeah, I hear that statistic, and people often use similar logic, abuse statistics, I think, to suggest that swimming in the ocean is... You're as likely to get bit by a shark, I don't know, standing around in a wading pool as swimming in the ocean.
No, you're more likely in the ocean.
Yeah, I couldn't think of the right analogy off the top of my head, but it's if I am not in a high-risk situation, if the hazard is totally absent, then the risk is zero. It can't be riskier for me to be sitting here than it would be for me to be on an airplane. There's no risk of mortality.
How do you know that? What if there's an earthquake? What if there's,
Right.
What if someone plows... Again, you can be at a shopping mall and someone plows into an Apple store like they did at Legacy Place and you thought you were completely safe.
Derby Street.
Was that where it was?
Yes.
Sorry.
It's okay.
I get all those big centers
Yeah,
confused.
South Shore, yeah.
That stuff can't happen in the air. Like, yes, you can have a bird strike on a plane that, takes out an engine. But the point that I'm making is, like, the redundant systems exist in aviation that don't exist on the ground, quite honestly. Like, you don't have a lot of those. Anyway, it's extraneous to the point, which is Boeing has kind of gotten to the point where we can't just reasonably say, oh, something went wrong and these things happen. It's now looking like very much as if there is a cultural problem that is ignoring problems before they happen rather than trying to proactively solve them so that when they do happen, they're not devastating. That's where it seems to have gone.
Seems pretty rotten.
Like it feels ugly there. And it's not unique to Boeing, by the way. You see this in other businesses and all kinds of industries. Wells Fargo for the last decade has been a dumpster fire in terms of corporate governance. Basically went from one scandal to the next in terms of they had the, obviously all the problems with the financial crisis. Then they had the account opening scandal where they were opening accounts for people in order to hit their bonuses without the people's consent. I mean, the thing is there, okay, the worst thing that happens to you still can be bad, which is your credit's ruined and you can't buy a home, but you don't die from that. When you're building airplanes and you don't take care to build your airplanes correctly, people die, and that's what happened. And the issue that we've talked about with Boeing that we keep coming back to is, look, they're so big and there's so little competition in the space that it's tough for the United States to really come down on them in any meaningful fashion because they play such a critical role in building, national defense projects and things like that. So it's kind of like, what do you do? And I don't have any good answers, but it's probably not this.
Yeah, are things that much better at Airbus? Are we just looking harder here?
Well, Airbus didn't have two planes crash that killed.
No, they didn't.
Again, ultimately you're judged on your results as an airplane maker. And it's not that nothing goes wrong, it's that nothing goes wrong and kills people. Because things always go wrong when you're flying planes. Talk to any of your friends who are pilots. Hey, I flew this leg, there's a warning light on this, we got to check this out for maintenance. But it's like that's what you want to happen when things go wrong.
Mm-hmm.
Hey, guess what? We had a bird strike, we blew out an engine. We returned to the airfield safely. That stuff happens. That's how you know the system is working right, is when things go wrong and you return safely. Not when, hey, the only thing that saved anyone from dying in this case was that the seat right next to the door plug was empty. That's lucky, not, planned. Let's take a quick break here. When we come back, we'll talk about the recent rally in U.S. Treasuries and what it means for that market going forward.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife.
There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today. 866-848-5699. That's 866-848-5699. Or request the guide online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
The rules regarding inherited IRAs changed a few years back with the passing of the Secure Act, and with the law being updated again in 2022, it's even more important to develop a strategy to help you make the right decisions regarding your retirement accounts. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Inheriting money from a spouse is common and will likely be a painless process for you. However, your heirs could be subjected to lofty tax bills if the distribution of your accounts are not coordinated properly, especially if you're inheriting one from someone other than your spouse. Don't let this happen to you. Call the Armstrong Advisory Group at 800-393-4001 and request our new guide called The Complexities of Inherited IRAs. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Piece today in Bloomberg stating that Treasuries are a whisker away from erasing this year's losses. Your thoughts, Marc, on what we've seen in U.S. Treasury markets
Tremendous
thus far?
rally of late on the long end and elsewhere on the so-called Treasury yield curve, that relationship between term to maturity and interest rate. We say interest rates on the show a lot, or just the interest rate, but there are lots of them, as you know from experience. So longer-term interest rates, and I'll just use the 10-year as a proxy for that, it started the year at, 3.95%. I'm not looking right at it, but roughly that. If you just looked at the beginning of the year to now, it looks like rates have gone up by a lot. But relative to only a few weeks ago, they've come down pretty rapidly. A part of that is due to declining inflation expectations, but not much. The bulk of that is due to declining so-called real interest rates. Real interest rates are just after inflation interest rates. And real interest rates are what you care about because they reflect demand for investment.
Sure.
And they're associated with economic activity. So it's nice when interest rates come down. It makes bearing debt easier. But it may not be a good sign. Low interest rates are typically a sign of feeble demand for investment. Low growth. Rates were very low in the 2010s. They were a notoriously low growth decade. So it's one of those somewhat double-edged, but you'd rather have higher interest rates and robust growth, i.e. A job and good wage growth prospects than, say, low interest rates and uncertain wage growth prospects.
And I think this also just speaks to the fact that, the first 3-4 months of the year, a lot of investors kind of bemoaning, oh, geez, these treasuries are just, they're not doing anything. I'm losing money on these. Why do I own these? And the answer is, look, you don't own treasuries because they make you a ton of money in a rapidly growing economy. As the Q1 data, as we saw, this acceleration in Q4 and then into the first part of Q1. You own treasuries because, hey, when it hits the fan, and inevitably it sometimes does, they provide you ballast typically to other things in your portfolio. So it's kind of this, the idea of diversification, I think, sometimes gets sold the wrong way, where it gets sold as, hey, this is how you make more money, whereas really it's, no, this is how you build a more stable path so that regardless of what's happening in the economy, you're moving in a more stable trend line towards your overall end goal, as opposed to, no, this is how you make the most money in any one year. Like, that's not what diversification does.
Yeah, treasuries are, like you said, ballast or insurance. Insurance stinks because it's just a drag. We'd all love to drop it.
Sure.
But you do so at your peril.
Yes.
Obviously, for the same reason, particularly if you're older. If you're a very young investor, you can argue for 100% equities, 100%
Absolutely.
stock portfolio, maybe even through your 30s and 40s, depending on your risk tolerance.
I think you could absolutely make that
and your
argument.
time frame. But if you're older, you need some of that, as you called it, ballast, which is a perfect way, I think, to think about the insurance that bonds represent. It's not fun, but you'll be glad you own it during the inevitable market downturn.
Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today, 866-848-5699. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Mark, there's a piece in the New York Times here. U.S. debt on pace to top $56 trillion over the next 10 years. Do you want to take the over or under on that?
Oh, how could anybody take anything but the over?
You got to pound the over on that, right?
Has the under ever paid off?
No, because here's the thing. The Congressional Budget Office, they put this out on Tuesday. They do these, is it a few times a year? I don't know how often they publish these projections.
It's at least a couple.
So they publish these, again, at least a couple times a year. And here's the thing about the CBO projections. Number one, they never predict any recession happening. That's not what the CBO does. They do not predict recession. And in recession, you always run higher deficits than you previously projected. So that's the first reason why you always take the over. Second piece. Mark, when's the last time that you think politicians actually cared about the U.S. deficit?
In the 90s, we took it seriously. We had two presidents in a row who enacted tax increases to close the gap between revenues and expenditures. George H.W. Bush did. Probably cost him, in part, the election because it eroded his support with the base, because he famously said, read my lips, no new taxes.
You can even make
that was
a case.
1990.
Look, even Reagan, when he was there, that was the last time we reformed Social Security, and those were tax increases as well
Yeah,
during
there
that
were
time.
plenty of
Like people forget that Reagan raised taxes
Yeah.
actually through raising Social Security taxes.
Yeah, we did that in '83, and then we had
Yep.
Tax Reform Act of '86, which I forget. It did not raise marginal
it
rates,
did-
but it closed loopholes, which is
Correct.
the same thing. So yeah, these guys were these guys were not dogmatic. Reagan as obviously the iconic conservative, but he was pragmatic.
Right, he said, "Look, I got to deal with this," and I think part of it
wasn't. I
came
don't think it
from
was his first priority, but
no, I think all of it came from the fact that they all lived like in adulthood through the 70s, and
Could
were
be.
kind of like, "Hey, like, no, we're not going to make those same mistakes again."
But thinking on deficits and debt has changed a little bit in the past few decades because of experience. The sky didn't fall. We've run up, but the debt at the end of Clinton's term couldn't have been much more than $2 trillion, just off the top of my head. I'm sorry if I'm getting that somewhat wrong. I'm not wrong by an order of magnitude, though. It's pretty close. We're now at, 30? So the run-up has been astronomical, beyond what anybody could have conceived. We were running surpluses in the deficit. The deficit was positive, that is, or we're running a surplus at the end of Clinton's term, and now we're running $2 trillion deficits. It's the norm. Interest rates are lower. How is that possible? Well, there are a few different explanations, predominant among them, increase in world savings. So the sky has not fallen despite the explosion in debt and deficits. That's one reason why neither of the presumed nominees of either major political party are talking about the deficit.
No, and look, you can find pieces going back the last 100 years pretty much on why the U.S. deficit is going to cause financial ruin for the U.S., and it's never come to fruition. Yeah. That doesn't mean it never will, but it hasn't in a time when anyone on the planet has been alive. And so I think that ultimately when you look at this, the part that is problematic to me is, look, when you look at the deficits that we're running now, it's projected to be, I think, like 6.4% of GDP this year now, up from 5.7 originally predicted. Hey, if you're running those deficits with unemployment at 4%, what's it look like when unemployment inevitably hits 6, 7, 8% in a recession? It's not going to be lower. And that's when it becomes, potentially problematic here. But look, the counter that I will say on all this is, hey, people have been predicting deficit doom for a long time in the U.S.
They'll be right at some point. At some point, it'll put upward pressure on interest rates, and there'll be nothing we can do about it. We'll have to cut spending dramatically and make big sacrifices. Until then, we won't.
But investing as if the U.S. deficit is going to cause imminent problems has been a horrible way to go about it for the last several generations.
Not a good timing tool.
Let's take a quick break here. When we come back, hour 2, including, hey, it's hot out there. How much is it going to cost to stay cool?
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide this month titled The Complexities of Inherited IRAs. Mike, with how the inherited IRA picture has changed in the last few years, one of the things that a lot of people need to consider is how to minimize taxation, not just across their own lifetime, but on a multi-generational basis once they're gone.
Yeah, and quite frankly, prior to these changes, IRAs were often used, especially Roth IRAs, as a kind of multi-generational inheritance plan. And these new rules have completely changed that, like I said, for most beneficiaries of retirement accounts. And so a lot of the planning that was done prior to 2020, if not haven't been looked at again, just might run contrary to your entire thoughts of what you did before these changes.
It seems to me that it makes sense now. You've got to consider the tax situation, age, and other characteristics of your beneficiaries who might not be spouses when figuring out who to name on your IRAs.
Yeah, not only that, and a lot of that stuff was considered prior to, but maybe you've got two kids with vastly different income situations. Do you consider naming one the traditional versus the other the Roth beneficiary in order to minimize total taxation across generations? These are complicated issues that I know it might sound like just applies to a small subset of Americans, but most people these days have a retirement account.
Our guide this month, again, it's titled The Complexities of Inherited IRAs, and the two ways to request it are by phone or online. Website is armstrongadvisory.com, or you can call 800-393-4001. That website, again, is armstrongadvisory.com, or the phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing & Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years. So call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
A little bit after 11 here. It's Chuck, Mark, and Tucker with you. And market's got a little bit of slight upward drift going on today. Largely egged on by Nvidia, which is up another 2.5% today on no news. Nothing new going on, but just another day. And so Nvidia continues to move up, now worth $3.428 trillion after adding 2.8%. Again, on no news. The stock is up almost 75% in the last month and a half.
For a company of that size, it's astonishing.
It is up 173% year to date. And in the last year, it is up 217%. Again, none of this is to say that NVIDIA is a bad company. Like, they make great products. They're highly profitable. But we're getting a little bit into wacky territory here with how some of this is moving. I don't know that means it doesn't continue. Again, there's a great phrase out there that, hey, it's a lot easier to make money betting with bubbles than against them. But things are a little wild at this point when you got one stock that's just driving the market so significantly.
Yeah, there's no good definition of bubble, and you'll hear the term more and more as NVIDIA continues its ascent. You don't really know until after the fact. I can't think of any case in recent history where something was called a bubble beforehand that didn't end up actually being a bubble, although the term gets thrown around so much, I can't say that hasn't happened.
The big thing is if NVIDIA were to continue at this pace, it would be worth as much as the U.S. economy generates in economic activity by this point next year. You know, like NVIDIA having a market cap the same as U.S. GDP is just, unless you actually think we're going to become the United States of NVIDIA, it's not realistic.
Yeah, I guess that's
and that'd be a tough
rebranding.
That'd be a tough rebranding. You know, people like George Washington. People like him.
Do they? I think he's been canceled.
He's got a nice wig. Okay, powdered wigs should come back. They're probably not going to. And this takes us to our top story for the hour, which is It's hot. Really hot out there. And not a dry heat either. It is a wet heat the last couple days out there in New England.
Hot enough outside for you there?
Yeah, it's getting pretty hot, Tucker.
I mean, jeez.
You could fry an egg on the sidewalk.
Jeez,
I know, because I did, and then I ate it.
Small talk the entire week.
Just brutal, right? Brutal. So, according to the Energy Information Administration, the U.S. average monthly residential power bill is expected to rise to $173 a month for the summer months of June, July, and August. That's up 3% from last year. They have the natural caveats, hey, it's subject to weather and this and that, but this is what we're seeing overall, even though New Englanders can expect to receive smaller bills this year because nat gas prices are down and we get a lot of our power through nat gas that we bring in through Boston Harbor because we don't allow the pipelines to be constructed to bring it in more cheaply. Don't ask. It's just what we do. So when we talk about the areas that are going to be impacted here, obviously it's going to be dependent on weather. And right now, hey, if you're anything like me, look, you probably don't necessarily run the AC when it's, floating around high 70s, low 80s, but when it gets up to 95, 96, you got to get it cranked up for a big chunk of the day because the house just becomes not really livable, which I know is a very soft sentiment to express. I know that, back, 40 years ago, look, almost no one had air conditioning, even at that point in time. One of the massive, shifts that you've seen in terms of the move to the Sun Belt has been the proliferation of relatively affordable air conditioning. Without that, people don't really want to move to North Carolina and live there year-round.
We didn't have central air growing up. It's because
I didn't either.
When the house was built, I guess. I think we spent a lot of time in the cellar and under trees.
We had
window units, but we didn't have central air.
We didn't even have window units. We didn't have any AC in my home. I think it was finally installed when I turned maybe 16 or 17. My family put AC in. But before that, look,
I think you were being punished. No window units, even?
No window units. We had ceiling fans, but we had no window units.
Yeah, that just blows the heat back down on you.
That was what we did. I grew up. We did not have window units.
You've topped me.
And part of it we were helped. I grew up in a single-story ranch, so there wasn't, a top floor where you were, having the heat rise to and, sweating while that was going on. Single-story ranch, low ceiling, like 7.5-foot ceilings. No basement, slab construction. It was, look, I grew up in Framingham. Like, half the town is single-story ranches with no basement. Like, that's basically what the town was founded on. Not quite, but that's what it was built on in, like, the 70s and 80s, and that was one of the houses I grew up in. But look, this is going to be one of the challenges that we deal with as we go forward with the power demands of these AI data centers and this and that is, hey, where are you going to get all the power from in order to supply that, plus your EVs, plus your AC and this and that? It's a real challenge for utilities to keep up with this stuff in the summer. And look, we're going to be struggling with it for the foreseeable future, I think. Any thoughts, Mark?
It will consume a larger share of people's budgets. The discomfort is intolerable, and I don't know. People have to cut elsewhere. I don't see any alternative to the current mode of living.
What if you just
people would brook?
What about putting like a big tarp over your house
you want to talk like
block
ideas?
Out the sun? Like is that
like
feasible?
The one you put in your windshield?
Yeah, one of those big. What if I tape together 20 reflectors and send the sun back to where it came from?
Just blind an airplane. That's okay.
Seems like a bad idea, right? What if I get a swarm of drones to cover my house and make it rain? I could connect a garden hose to all of them with a sprinkler and make it rain.
All holding fans.
Listen, someone's going to try this stuff somewhere.
I don't think anybody's trying that one.
Drones have gotten a lot cheaper, Mark. You'd be surprised.
This is true.
Let's take a quick break here. When we come back, we'll do some trivia here on the Financial Exchange, and then we're going to be talking about home prices and why Americans are not buying more EVs. All that coming up right after this.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com.
This is the Financial Exchange Radio Network.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today. 866-848-5699. That's 866-848-5699. Or request the guide online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials, and you'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood, void where prohibited, dine in only. Another day here on the Financial Exchange. trivia world, I guess, and we're going to continue state capital trivia as we have been doing. So here we go. The largest state capital by land is Juneau, Alaska, at over 2,700 square miles. The smallest state capital by land size is a mid-Atlantic capital that is only 6.7 square miles. Trivia question today: which state capital is the smallest by land size? Once again, which state capital is the smallest by land size? Be the seventh person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on tomorrow's show. 617-362-1385, and the seventh correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Do you know how many different national capitals the United States has had? Either of you?
No.
I mean, I could guess quickly. New York, where was the Continental Congress cited, basically?
Yes.
Because they were all over the place during the war.
Yes, they were.
It was like you got Annapolis, New York City, Philadelphia.
Let's talk post-war.
So we were in New York for a little bit during the transition.
Because during the war, it was basically all in Pennsylvania, but they just moved around Pennsylvania because
we were getting our butt kicked
wasn't very safe
all over
in
the
most
countryside.
Pennsylvania. Yeah. Post-war, how many capitals has the United States had?
I'm going to miss one probably. I would have just said New York, and then they moved to D.C., but it was probably Philly, New York, then D.C., but I don't know off the top of my head.
There's three more also.
Holy crap.
So Philly was the original one, starting in 1781. Then, after that, very brief period, about 4 months, in Princeton, New Jersey. Then, you'd say, okay, then they go to D.C. Nope, then they go to Annapolis. Then to Trenton, New Jersey for a month. Then to New York for a few years, Philly, and then back to D.C. And that's where, obviously, they've been since then. For the last 205 years, they've been at the United States Capitol. Because remember, the Capitol building wasn't built until, any guesses? Anyone?
When did it? Oh, it didn't get finished until like the 1860s. I know
1819.
That. Okay.
So there's, some other stuff going on in D.C. in 1812 that, made it not really hospitable to building new political buildings at the time.
Or easier, depending on your point of view.
Well, it depends. Yeah, exactly. Let's talk a little bit about home prices. There's a piece from NPR. It's titled, U.S. Home Prices Have Far Outpaced Paychecks. See what it looks like where you live. And look, it's absolutely true that U.S. homes have the prices have outpaced paychecks. The piece that's interesting to me is I'm not sure this is going to change for two reasons. The first is builders have said, look, we don't want to get screwed like we did in 2008 where we just overbuild and end up getting hosed with too much new construction inventory. So they're not building as much. The result of not building as much is that you have fewer overall homes for sale, which means if you're selling to a smaller group, you don't need to target as broad of the population who can afford your homes. So it's natural that when you are building more homes, you're going to end up targeting higher income buyers because you can make more money selling to them than selling down market. So, yes, if the average person were trying to buy a home today, yeah, incomes have not kept up with home prices, but a big reason for that is because when you are building fewer homes, you're not targeting that middle portion of the country to buy those homes, unfortunately, and so they end up getting left behind as a result of those decisions. It's not the wrong decision for the builder, but it kind of sucks if you don't have, an income in the top third.
And it's not just a case of a few high-end homes. The whole distribution, if you like, the whole population of homes being built and sold and the prices at which they're sold has shifted to the right. If you look at median sales price of houses sold relative to median household income, that ratio, sales price to income, using median so that we're filtering out the extremes, is nearly 6. The highest it had reached before, that's roughly today, or that's roughly the end of, that's roughly 2023. These statistics are a little bit dated. That's much higher than the previous high of about 5.3-ish in 2014 and way higher than the housing bubble high of 5.1 of 2005. So something has fundamentally changed.
And the place where I think this is actually going to have potentially interesting effects is you look out over the next 12 to 15 years, and one of the things, just based on the demographics that we're seeing, baby boomers, by and large, are going to start passing away during that time. Like, that's going to be some of the highest years of deaths that we've seen in the United States. And when they sell, or when they pass, what's going to happen to all of those homes? And how does that work its way into the market at that point? Because that's inventory that really has not reached markets in a while. A lot of those homes have been owned for 10, 15, 25 years. And so if you get this consistent influx of inventory, not like a giant wave that happens in 1 year, but just this
hopefully not.
Just this consistent push for 10, 15 years that's happening. Hey, there are only so many people that can afford to buy homes at those prices. So if their kids say, no, I'm all set, I have my housing all settled, I don't want to live in the home that my parents, owned. Okay, that inventory comes to market. What prices do you need to find in order to clear that market as that additional inventory comes out?
That's happening now. It's not putting, maybe because we haven't reached the bulge.
We haven't reached it yet.
But it is that process is happening is happening now.
It is. It's happening modestly, and so we'll see how that ends up impacting it, because the thing that I do come back to is these prices we have now can only be supported if you have a lower volume of transactions happening. If you need more transactions to clear that market for one reason or another, prices are going to have to move lower. And we're seeing this already, by the way, in the few markets that now are back to pre-pandemic levels of inventory, Florida, Texas. You're seeing home prices coming down in those areas now as a result.
So if you had to guess in, say, 15 or 20 years, does the home affordability crisis of 2022 to 2024, in the past few years, since COVID, home prices are up 50%. Absolutely unprecedented.
Yes.
Twice the highest rate over a similar period historically. It's just bonkers. Is this just a blip, an artifact of a bunch of special factors that's going to get fixed as more supply comes on the market for demographic reasons that you talk about? Or is this something we're going to be living with? Just your best guess for the next, say, decade. Does this resolve itself pretty fast?
Not pretty fast.
Okay. For the reasons we just talked about, that demography is going to take time to play out.
Here's where I do think it resolves is, let's say you're looking like 2 decades. I think that if you look over that time period, like 2020 through 2040, I think you probably see home price growth looking pretty similar to the previous 2 decades. Just there's no way to support it otherwise. So I think a lot of the price gains have just been front loaded here. You might not see prices collapse, but maybe they just don't go up very much for the next 15 years.
Yeah.
As incomes catch up and as more inventory comes out. That's where we may end up. Now, forecasting home prices for 20 years is kind of like a useless.
It would have been
trick,
easy 50 years ago. You would have said, well, historically, they've increased at about the rate of inflation. Nobody viewed homes as an investment, forgetting about the rental savings and other attendant benefits. Would have been easy. Now it's hard because they're behaving like equities.
They are, but I do wonder if that's a short-term thing.
Oh, I think you're probably right.
The numbers don't make sense otherwise.
How could it not be? Population's growing at 1% a year.
Right.
GDP is growing at less than 2% a year, real. Now, I'm confusing real and nominal a little bit. But how is that sustainable?
But the thing, even on the investment side, like, people don't realize, look, historically, as you mentioned, the price of homes has gone up basically around the pace of inflation.
It's a good inflation hedge.
3 to 4%, somewhere in that ballpark. The reason why people look at real estate and they're like, oh, like, I made so much money doing this is because the leverage that you get through a mortgage. Okay, if prices are going up by 3% a year and you put 20% down, great. On your, actual investment, you're making 15% a year. Like, it's how the math works.
And plus holding period.
Right. Exactly.
If you hold it for a generation, that's a very respectable overall increase.
And then, you have the times where home prices go down, and this is where the leverage works against you, like in 2008, where you end up with a bunch of short sales because, we did some bad stuff. Very bad stuff. Taking a look at markets as we head towards the bottom of the hour. Not a ton of movement right now. Again, just kind of treading water here. Dow's up 60 points. S&P's up 4. NASDAQ's up 5. So nothing really moving too much. 10-year U.S. Treasury is up 5 basis points to 4.27%. Oil, West Texas Intermediate, up another 59 cents a barrel, back into the low 80s, now kicking around 82.16. AAA national average for gas prices up 0.6 cents to 3.45 and 0.5 cents right now. So continuing to hang out in the mid 340s, but looks like those will be heading higher, unfortunately, as we get towards the 4th of July holiday. And then we've got gold up $25.70 an ounce to $23.72. And
Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the differences between revocable and irrevocable trusts. Todd, is there a difference in the taxation of a revocable trust versus an irrevocable trust, and any difference in how you would file your income taxes?
So surprisingly, a lot of you might say, well, yeah, there should be a difference. And there is, but there really isn't. So let me explain. With a revocable trust, everything that you put in it is going to be titled under your social security number, like bank accounts and brokerage accounts, etc. Whereas items that you put into an irrevocable trust, like bank accounts and brokerage accounts or rental properties, those accounts would be set up under a tax ID number for the trust. So the trust now does need to file its own tax return. It's called a Form 1041. However, these Medicaid trusts are designed by us to make them grantor trusts for income tax purposes, which means you are the owner for income tax purposes, and all the income and gain gets reported on your personal return. So while you're filing a separate return for the irrevocable trust, you're paying exactly the same tax at your own rate, just like you did before the trust and just like you would with a revocable trust.
Well, the estate planning experts at Cushing & Dolan have written a brand new guide that will help you answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can also request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Taxation is a critically important element to be aware of when you're building your estate plan, especially when it comes to understanding inherited IRAs. The tax treatment of these accounts depends on a variety of factors, including the specific type of IRA, the relationship between the deceased and the beneficiary, and the beneficiary's personal circumstances. In this month's new free guide from the Armstrong Advisory Group called The Complexities of Inherited IRAs, will help you understand the possible tax complications you could face when inheriting an IRA. Plus, we'll walk you through the recent changes to federal rules regarding these accounts. Get your free guide today by calling 800-393-4001. 800-393-4001, or you can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Trivia question today was, which state capital is the smallest by land size? That'll be Annapolis, Maryland. It is the smallest state capital by land size at only 6.7 square miles. Trenton, New Jersey, and Harrisburg, Pennsylvania round out the top three smallest state capitals. Winner today of the Financial Exchange Show t-shirt was Greg from Fitchburg, Mass. And Greg is also registered to win a $100 gift card to Applebee's, which we'll give away on tomorrow's show. And trivia is brought to you by Applebee's. Enjoy half-priced late-night appetizers after 9 p.m. And join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood, void where prohibited, dine in only.
So there's a piece in, the Financial Times?
Yes.
Yes, the Financial Times. It's titled, Why Americans Are Not Buying More EVs. And the answer is because they don't want to. It's just, it's what it is. I still feel like the whole story around EVs is just kind of messed up at this point, because this is trying to make the case that, hey, EVs are too expensive, when in fact we're not really seeing that in the car buying data. The average new car that's bought right now, still costs about $48,000. It's not like Americans are flocking to $25,000 vehicles like this piece is suggesting. Americans are not buying Honda Civics in record numbers right now. That's just not the trend that's happening. What we are seeing is Americans saying, yeah, I'm not ready to buy an EV at this point in the numbers that manufacturers were expecting.
I don't love comparing the average price of a new car with all of its features, etc., to the average price of an electric car, which has inferior range, feels like a low-end.
Well, I'm just comparing new to new.
Yeah, no, I know, but what I'm saying is you get a lot more for conventionally powered,
you
right?
Do.
I just
you do.
I don't have a better suggestion, Chuck.
Totally.
I'm sorry, I don't mean to ruin your rhythm. I don't love that.
No, and I think that's why you're seeing Americans do this.
So it's about more than affordability. It's quality and the intangibles like range.
Look, I'm not ready to make the jump to that. Even I'll tell you, look, my family owns one EV. I needed a new car last year. My old one was finally it was due, and I looked around and I said, no, I don't really want anything else that's on the market right now. I'm not ready to commit to two EVs, and so I have a conventional internal combustion engine vehicle for my second one. It's not that I don't inherently like EVs. It was just I wasn't ready to commit to two of them for some of the reasons that you noted there. But the other piece on this that I do feel the need just to point out, it's not like you have EVs that are just not being sold. Ford is an example, who is scaling back their EV plans. Still saw their EV sales up 65% in May compared to where they were in May of last year. It's just they weren't up the 120% that they were expecting based on how they were projecting their numbers previously. So I think that when you look at this, two stories can be going on at the same time. The first is, look, Americans are not buying, 100% more EVs this year than last year as they were for the past 3 years, where you did have that curve just scaling up exponentially. They're still buying a lot more EVs than they were, but it's not nearly as many as car companies, thought they were going to need to produce. And car companies now also look at what's happening with Tesla stock that's off 50% in the last year, and they're saying, hey, we used to be able to say that we could get, a premium for our shares for being an EV manufacturer because of all the EV hype. We can't get that anymore, so let's instead, hey, do what analysts and investors want, scale back those expansion plans, be more, constructive with our capital, be a little bit more, discerning about how quickly we want to grow, and we'll be rewarded for doing that instead of for expanding too quickly and potentially running into problems. And so that story is going on as well. There's kind of three different things that are happening here. But look, Americans ultimately aren't buying EVs for every car because they're concerned about range, charging, like all these different things. And they may get there at some point. They may not. I don't know. But this is where we are right now, is companies got just way too aggressive with how many EVs they thought they were going to sell. They're still selling growing numbers, but not anywhere near where they thought they'd be because Americans don't want them right now.
The most eye-popping increases in EV sales year over year, if you segment it by brand, which Kelley Blue Book does conveniently, are in luxury cars. Cadillac's sales year over year. This is Q1 2023 to 2024, up 500% roughly.
It's coming off of really small numbers to begin with.
These are small bases, so it's a little preposterous, but the industry reports percentages. Jag, sold 50 cars in the first quarter of 23. It's now 250. The numbers are a drop in the bucket. So on the margin, it looks like, with the exception of, Tesla's numbers were down, as we all know. The conventional mass production automakers like VW down a third, Chevy down 50%. Not looking good for mass market EV growth.
And the other thing that I will say is going to be interesting, the next few years, there are a number of companies that have said they're getting close to being able to roll out what's called solid-state battery technology. And solid-state, the promise of it is much more energy-dense and much faster charging. So, in theory, you can get a 500-mile charge that happens much more quickly and happens with much less weight added to the vehicle, and it's a huge potential, upgrade in terms of the technology. But no one has been able to manufacture solid-state batteries in large quantities.
Toyota keeps saying they're 3 weeks away. But
Toyota's been 3 years away for the last decade. I swear, every year I read, it's going to be in 3 years. It's like fusion power, always a decade away. Not for your car, but for, towns and cities and stuff like that. But if you can actually get some kind of solid-state battery that offers the densities that are described in all of these publications, where it's, this is what we were able to do, but we just can't manufacture it in large enough quantities yet. If you can finally get there, it's game-changing for the industry then. But we're not there yet. Let's talk a little bit about X, formerly Twitter. Back last fall, maybe it was last winter, Elon Musk was asked at I think it was a New York Times DealBook conference, asked, hey, what message would you give to advertisers who would consider leaving your platform? And he told them to go F themselves, which they then did. They said, okay, fine, goodbye, we're not going there. It's been revealed this week that ad sales at X are now down approximately 40% year over year in the first 6 months of the year. This came from, I think, a fundraising deck that was indicating this. And so Elon was at the Cannes Film Festival in France. I don't know why. I don't know if he's not putting on a movie, is he?
I don't know why he was there.
It's kind of hard to tell. But he gave an interview, and the host said, look, back in November, you had a message to advertisers. You told us to go F ourselves. Why'd you say that, and what'd you mean by it? And he said, quote, it was with respect to freedom of speech. Advertisers have a right to appear next to content that they find compatible with their brands. That's totally fine. What's not cool is insisting that there can be no content that they disagree with on the platform. Seems like a bit of a pivot for him in the last 7 months.
Well, his specialty is not geniality, not public relations. I don't know. We get little snippets of his personality, and none of them rub me the right way. I don't know what to say about this guy.
Yeah, and
I don't know what to make of him.
And here's what I can say. Elon plays to whatever market he's talking in. Like, when he goes to China, he never talks about free speech there because Chinese government doesn't believe in free speech. When he's talking to a U.S.-focused audience, he's happy to play up that message. But if Elon really were someone who were championing free speech, well, he'd be going to China saying, no, like, you guys need to adopt more free speech principles, not, wishing the Chinese Communist Party a happy 100th birthday as he did.
Yeah, that's fair.
It's you either are or you're not. These can't be things of convenience for you. They have to be permanent or not in terms of, your beliefs. They're not things that you can just change all the time. Otherwise, who are you?
Yeah, he runs the risk of being, he is regularly called a hypocrite for those reasons.
Let's take a quick break here. When we come back, we'll do a little bit of stack roulette.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network. Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today. 866-848-5699. That's 866-848-5699. Or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John. Enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mark, what do you have for me for Stack Roulette?
Potential good news on the inflation front. It's important not to confuse one company like Target, for example, cutting prices, or McDonald's, the subject of this article in Bloomberg, reintroducing the $5 value meal. I didn't know it went away, but I guess it did. And others are following suit. Their competitors are following suit. So the volume of stories, guys, correct me if I'm wrong, showcasing big firms cutting prices in a high-profile way and trying to get a lot of advertising mileage out of it.
Yeah.
That's picked up the volume of those types of stories. And because inflation is the change in the average price of goods and services that we buy, it does mean something if a lot of companies are cutting their prices. Now, that could be swamped by the effects of a special factor like a big oil price spike or something, which we're not seeing right now, thank God. But on balance, stories like this, again, McDonald's making its deals, I'll just generalize and say making its deals more attractive for those of us that use the app and like it, and others following suit on the heels of news about Target and Walmart cutting prices. Surely this, all else equal, is good news for getting inflation to further moderate. All else equal.
The counterpoint to it is what it means for the equities of the companies that are involved in these different promotions. And if you think about it, look, let's say that you offer a promotion where you are discounting your product by X percent. Again, all else being equal, you would expect your margins to be reduced by that much as well, so potentially reducing profit. Or the other piece is, hey, if we need to maintain our margins, where can we cut costs? A lot of times it ends up being headcount. And if it is headcount, are broad-based headcount reductions to maintain margins, do those end up resulting in higher unemployment, which leads to a slowdown, which leads to a recession?
Yeah, there are potential
that's possibly
bad
where you go.
Effects. Yeah, I was just focused on the inflation picture
and
the seeming, just my anecdotal, my sense of the anecdotes out there, the mounting news that companies are at least being very conspicuous about the prices they are cutting.
Have either of you ordered anything from Amazon recently?
Sure.
Small retailer, just curious.
Yes, I have.
2 questions. Have you started to see more things just showing up without a box, just in the packaging?
The other day. Literally the other day, yep.
What'd you get?
I had to get more pellets from my pellet grill. I ordered it day of. I ordered it at 11:30. It was there by 4 o'clock.
And they just slapped the mailing label right on the outside of it? No box, nothing?
So in the past, they've put that in the box, but this time around, it was just a mailing label right on the bag of pellets.
So that's number 1 in terms of the changes I've been seeing. I've been seeing much more stuff just showing up without the Amazon box. The ones that are showing up with the box, this piece from CNBC talks about it. You remember the plastic pillows that were inside, the air-filled ones that you'd have to stab with a scissor in order to deflate?
Yeah.
They've gotten rid of 95% of those now because
they're unnecessary.
Completely unnecessary. They're replacing it just with, some crumpled up paper and stuff like that, just to, not have packing peanuts in there. But obviously it's both cost cutting and they're saying it's better for the environment. But all this is leading towards, in my opinion, you're getting more stuff delivered just without the Amazon box, even just because they say, look, this is unnecessary. We'll just ship it to you. And if the UPS guy sees exactly what you're getting, fine.
Don't
no problem.
They give you the option when you're making the final decision on the order? Do you want this in an Amazon box? Do you want this in a shipping box because it may ship? I've seen that option.
They might. I just typically use the buy now button on my phone.
Yeah.
And so if you do that, it's not going through as much.
Yeah, I think there's an extra step in there if you Don't use the one click.
I don't really care. It's fine. Like I'm comfortable enough in myself to be able to say yes, it's okay. It's like when you used to go to Blockbuster Video, and you're like, all right, I'm gonna rent Titanic tonight, and I got to walk up to the counter and show the guy that I'm renting Titanic. But like that, you had to develop a little bit of self-confidence to be judged by the Blockbuster guy. This is the same thing. It's just the UPS guy's judging you without even looking at you. It's fine. You just got to get comfortable in your own skin. Yeah, I ordered Titanic. Deliver it. Am I wrong?
I think it's an odd comparison, but
I think it's. I don't know. I think it's very similar in my opinion. Mark, what else you got for me?
I was just thinking about the time that they shipped Rogaine, which, for those of you who don't know, is a hair growth treatment. They shipped it to me without a box, and it went to a neighbor.
Oh, interesting.
He was more. I was like, whatever. I'm middle aged.
Yeah.
You're like it's cool.
Yeah.
I'm not putting it in a weird place. I'm using it on my scalp. It's not. There's nothing untoward going on here. He was very sheepish handing it to me, so it was more embarrassing for the neighbor than it was for me. So I complained. I immediately saw an opportunity to get a courtesy credit from Amazon.
Sure.
They gave me $25. So complain about if you order something embarrassing. I don't know, hair removal. What could you get from Amazon that might be a little private? Undergarments. Complain.
There's a lot of things you could get that are embarrassing on Amazon.
Well,
sure.
What do you buy? Well,
they lost a TV that I ordered once.
How do you lose a TV?
Yeah.
No idea.
Fell off the truck.
It was maybe 7 or 8 years ago, and ordered a TV from Amazon. Did the price shopping, and they had the cheapest one. Ordered it from Amazon. Just doesn't show up, and finally about a week later, I'm like, hey guys, any update? Nope, we lost it somewhere in the warehouse. We're going to send you a new one, and we'll give you a 20% credit.
That's awesome.
I'm like, how do you lose it?
Feel free to lose stuff in the future.
Somebody, we have 2 texts that just came in. Someone's asking the question if the lack of boxing is to dissuade porch pirates from taking mundane things, and another guy said, "UPS guy here, we don't give an F."
Good.
Which is what you expect. Yeah.
Exactly. But the porch pirate thing, I don't know. I've often heard that the mundane things are the easiest for them to resell because no one asks where they came from. Like if it's a 3-pack of deodorant, okay, like no one's like out looking for that. It's not, there's no emergency. Whereas if it's a laptop, okay, there might be a little bit more focus put on that. So I've often heard that it's the lower value, more common things that porch pirates might actually be more interested in.
Well,
getting
it's easier to move because there's widespread demand. Yeah, okay.
I've always thought the porch pirate thing happens because it's like a mystery box. Ooh, what could be inside? Let's find out.
Who was the guy who was making the glitter boxes? That to dissuade porch pirates, where it just like explodes into like a flurry of glitter and glue that like gets stuck to you.
Nice.
I like it.
Right, kind of a good idea. I remember
when it gets all over your porch.
When I used to live.
Well, they don't open them there.
When I used to live in Somerville, it was a real problem. So I had basically all my packages shipped to the office in order to avoid it because they would go missing pretty regularly. It was a real problem. And then everyone in the office got to see what I was buying, so that was fun too. We're going to take a quick break here. Back at it tomorrow to finish out the week. We'll see you tomorrow on the Financial Exchange.